Hey traders and investors, welcome back on the Pursuit of Wealth. It's Rod with Pow Group. Today is a daily market recap for Monday, March 8th, and in today's video we're going to be discussing GameStop Corporation, GME. We had a huge move today, up over 40%. We'll look at some news and events, and then we'll look at the broader market as well. But before we do, make sure to smash the like and subscribe to the channel. So we didn't have that much news to report today, but over the weekend we saw that the Senate passed the 1.9 trillion relief bill, and the House is set to vote tomorrow, and Biden is expected to sign it later on this week. So we've been saying on this channel for a while that we expect the market to melt up into that, and that's what we've been seeing. We've been seeing volatility pick up, but we could see some progress on that later on this week, and it could even be approved, and stimulus checks could be sent out later on this month. So taking a look at GME before we look at the broader sector. So up over 40% today. Congrats to the bulls. We did have a daily EMA 12 and 26 bull cross that lined up here with these inside bars that broke bullish. So it was a nice play off of that signal. And coming off the low here at 38.50, huge move. We had resistance at 184.68, which we got above. And we closed above it at 194.50 and sitting at 196 here after hours. So it's all about the hourly uptrend at this point. As long as we maintain this hourly uptrend, bulls are in full control of the short term, and you can definitely sense volatility when GME and AMC are up 40 and 15% respectively. On the bear list today, we had Dash, Snow, Fiverr, JMIA, and just taking a look at GME here on the weekly time frame. So we're back above the 10-week moving average, which is at 103. And the MACD and stochastic have crossed extremely bullish once again. On the moving averages on the weekly, you can see we had a cross of the 50, the 100, and the 200, and then the 100 and the 200 crossed bullish as well. And that was all occurring while we had that weekly consolidation. So some huge follow through after we're seeing those bull crosses of those weekly longer term time frame moving averages. On the daily moving averages, we did lose the 50, but we held the 100-day moving average. Could have been a nice entry there as well with a stop below the 100-day moving average, and you would have never gotten stopped out, and you would be up, just a cool 400 or 500% from those entries. So lots of volatility. And on the weekly time frame, you can see here this blue line, the 20 weekly moving average. Perfect test and bounce off of that, confirming support. We're back above the weekly VWAP as well. So we've got resistance on deck, very limited resistance on deck here until the highs of 484, I think it was, 483. We also have a gap on the chart here to fill at 212. So that could be a potential target as well. But definitely remaining cautious here. We've seen weakness in the market. We've seen volatility pick up both in individual tickers such as GME and AMC, the highly shorted names. And we're starting to see volatility pick up in the broader market, like the S&P 500. Tesla was weak today, closed down 5%, closed near the low of the day. So electric vehicles are struggling. Apple closed down almost 5%. So I've been very bearish on big tech for a while. And we've been calling out saying that we expect it to go even further to the basement. And after last week, it showed no confidence whatsoever. We're still in daily downtrends on a lot of these names. And until that changes, we are bearish until proven otherwise. SPY, same deal, daily downtrend. We could be setting our daily lower highs. We mentioned that that's all we would be expecting based on the fact that we had this huge pullback, and we would just expect a daily lower high and a continuation of this daily downtrend. And closing near the low of the day, if we do break the low of the day tomorrow, then daily consolidation will be underway. So 381.42, very important. After that, no support all the way down to 371. And then we have our key weekly support at 368. So again, the dollar was the clue last week to de-risk a little bit. We changed the daily trend, so SPY was in a daily downtrend. The dollar's in a daily uptrend. We are approaching daily oversold, so it's time to be a little cautious here. We are getting a little extended We have a 4-hour inside bar here on watch on the dollar. And if we do start to consolidate on the 4-hour, we can look to EMA 12 here at around 92.05. But all about the 4-hour uptrend. So support here at 91.84. If we lose the 4-hour uptrend, then we will anticipate daily consolidation. But we need to lose the low of the previous daily candle as well to be 100% confident that daily consolidation is underway. Again, no support all the way down to 90.63 on the daily time frame. So if we do see stimulus get passed, we could see tomorrow stimulus get passed by the House. And if it goes on to Biden for him to sign, then that could obviously weigh on the dollar, and that could be our catalyst that gives us our 4-hour and daily consolidation. But we've been hinting this out for a while now that the dollar has been on the top of our watch list, and you can see here with this weekly trend change, the first time since back in March a year ago, that is a huge notable and momentum shift to the bulls on the dollar, which is bearish for stocks and the overall broader market. But again, we need to see this continue, and we need to see the dollar continue holding its daily uptrend, and its 4-hour uptrend are going to be the most important, while SPY is attempting to change its daily trend. So IWM was up about 0.5% today. QQQ notably weak, down almost 3%, closed near the low of the day. Daily downtrend, so again, daily downtrend on most names, including SPY. And daily lower high looking set on SPY here with that upper wick. And pullback, again, hourly uptrends are key. So taking a look at SPY. SPY just looking for an hourly higher low here. And we did have this low, high, higher low, higher high. No support here on the hourly all the way down till 372. 372.65, then 371.88. Then we have key weekly support at 368. And if that comes into play, if we lose the weekly support here on SPY, that is going to be a huge momentum shift. We would see the US dollar in a weekly uptrend. We would see the S&P 500 no longer in a weekly uptrend, so losing its uptrend while the dollar's confirming. That would be extremely bearish. So US oil pulling back today, down about 2.5%, and bearish reversal candle there, closed near the low of the day, lining up. And we are extended on the weekly time frame. We haven't really consolidated on the weekly on oil since down at 33.67. So when we consolidate, I'm expecting a fairly significant drop on oil, but we did have this monthly bull cross of the EMAs, which has already played out, in my opinion. We had resistance here at 66.58. We got above, we had 67.94, and ultimately pulling back. So I would be cautious on the energy sector. Gold and silver have been weak, and gold, we've been calling 1670 on gold, which was our weekly support, and we touched down to 1676 today. That was close enough for me. I am bullish on gold. So the financial sector held up well today, broke to a higher high. So definitely one of our clear lead bulls. And again, the energy sector weaker today. Not surprised with the weakness in oil, biotech. So closed near the low of the day, broke the high of Friday, but again, we need to change these daily trends, and there's no sign of any trend changes in most of these indices in these broader markets. So I'm very cautious at the moment. I'm back to about 50-60% cash in my stock portfolio and swinging some SPXS. So I'm short SPY, I'm short the tech sector, and I'm mostly cash. I've got some long positions still in MJ and got pretty good fills on those last week and sitting comfortably on those. Sold a little bit into profit, and I'll do a little bit later on. I'll do another video on the cannabis space as well. So that's pretty much all I have for you guys today. We're going to end it there. So hopefully you guys didn't get chopped around too much. The markets have been extremely difficult the last few days, and that has a lot to do with volatility picking up and just overall fear and uncertainty starting to pick up in the markets again as well. So make sure to use stop losses. Again, if we see more downward pressure tomorrow, we could see even more red and even more continuation. QQQ close near the low of the day, very close to getting more downside continuation. And if that were to occur, we could expect a similar move on SPY as well. So make sure to exercise caution tomorrow, especially into the end of the week. We're starting to see volatility return in a big way, and we're starting to see a lot of check boxes that we've been waiting to see ever since the lows of March last year. And number one was the dollar. Number two was the loss of the daily uptrend in SPY. So we had the dollar confirming a weekly uptrend. The dollar lost its daily uptrend. Now we need to see the S&P 500 lose its weekly uptrend. If it does, then we're going to be very bearish here at Pow Group on stocks. So that's going to do it for today's daily market recap. Thanks for joining us on the Pursuit of Wealth. Make sure to smash the like and subscribe to the channel, and we'll see you a little bit later on for an MJ sector review. Take care, everybody.